Hey, welcome to the live stream. This is a watch party for the Netflix earnings that are going to be dropped in roughly 8 minutes. We are 7 minutes from the stock market closing, and we are going to be analyzing Netflix, see how they're growing, their top line, their earnings per share, see what kind of cash flow they're delivering on their financial statements. We'll also see how things are going with their whole acquisition of Warner Brothers and what's going to happen there. I am joined by Daryl. How you doing, Daryl? And Daryl,
I'm
you are
doing pretty
mute.
good, Victor. It's been a busy day, but I'm glad to be here.
Perfect. So yeah, it has been. And this week, we had a shortened week with Monday not trading. So today feels
It's
like a
been Monday
compressed
all day
Monday,
to
huh?
me today. Yeah, it
Exactly.
feels like Monday to me right now.
So, what are your expectations out of Netflix, if you have any?
I don't really have any. I haven't been following them too closely, uh, except for the acquisition of WBD because I am a
Mm-hmm.
WBD holder because of it was a spinoff from AT&T. So I've been watching it because of that. But as these prices continue to get better, it's becoming a little bit more intriguing.
Yeah, it's Netflix is really sold off from June 30th to where the stock is now. It's down 34.4%, but it has been a stock. I made some good money on Netflix. Now, I bought Netflix around this range here, and I wrote it up nicely up to this point. And then I took a bow and said adios, and I took my money and banked it. And
There
I
you
made
go.
good money on that investment. And I watched other investors with envy. I was like, oh man, I guess I got out too soon. And those investors went up 40%. But now looks like I got out, investing's never perfect. So you just gotta figure out how to make money year after year. And that's what I certainly did. And I got out. But I've made money on there's some stocks that I've made money on them on several occasions, and I'm good with that. Like I made money
Yep.
on TSMC, good money, sold it, and then I made money on them more recently. There's no rule against making money on a stock multiple times. No rule against it. So if Netflix continues to get sold off, maybe it becomes a good buying stock, but it's not a stock that I currently own. Is it a stock that you own?
No, I do not own them.
All right. All right. Perfect. Okay. So Netflix today traded and at the open, I thought it was interesting. It was up quite a bit. It was up quite a bit. If you see where it traded, it was up $89 per share, almost $90 per share. And then ever since then, it really settled down. So now it's down a little bit, but it's been a terrible day, right? It's really big sell-off day, thanks to those tariffs, right? I don't know. I think a few people in the United States like the tariffs. And I'm
Uh,
probably on the camp that I don't like tariffs. I don't like what they do. I think it's a tax. I think it's distracting, but we got to deal with them one more time. And here we are, 25% tariff on Europe over the whole Greenland thing. And it's causing our stock market to sell off. And it's been a doozy of a sell off. S&P down 2%, the NASDAQ down 2.3%. And Netflix early in the day, it was trading much higher, which I thought was impressive. A lot of people feel that Netflix is somewhat of a consumer staple stock. It's a safe stock because people aren't going to cut their Netflix account. If the economy gets bad, they're not going to cut it. It's such a value, right? You can watch TV, you can watch movies, and so forth. I agree with that. I'm not going to argue with that. But I also think that Netflix, their main competitor is YouTube, and YouTube has just a superior model. It doesn't have to pay anybody to create content. They could just have content creators like you and I create
yep.
content, or it could be the actual, you know, production companies, movie companies that put clips on YouTube because they want the eyeballs on their content. And that's just a superior model. And I think YouTube's going to win in the end. So I'd rather just own a lot of Alphabet stock, which I do, and I'll leave Netflix for others to invest in. So you want to show the charts on Netflix while we wait for the earnings to drop?
Sure.
All
I'm
right. The
getting
screen is
the,
yours.
okay, I'm getting the intraday chart set up where we can look at the after hours after they report and get looking at those. Okay. Maybe I'll just go to 1 day. Okay, and then make sure we have after hours enabled. Okay, now let's go to the chart. We got to take a look at this fix real quick while it's up on my screen. We popped up over 20 today. I mentioned in a video over the weekend that once it gets above 17, you start thinking about putting your seatbelt on. And once it gets above 20, you better have it fastened up. And we did get above 20 today. So we will go to Netflix, look at the 1 year price chart. And I was asked just this morning where I think a good entry point is, and it looks to be about this price, about right here. It's found support 2 times over the past year since that level was pointed out there. So it looks like that's probably around $82 a share. That's probably within the well, not quite the implied move today, but if they go down by the implied move, we'll be really close to that price. So this is, let's just go to a 1 year. We're looking at daily data. We do have a 200 day that had been increasing, so they were in a primary uptrend. It's been leveling off since the announcement of the acquisition proposal for WBD. We can see now that they are entering officially a downtrend because the 200 day is starting to roll over for the first time. The 50 day looks like it peaked out somewhere in July, leveled out, and then it started declining. So we have a 50 day that's declining, and we have a 21 day that has been declining since about the 3rd week of October and been steadily declining. Looks like we have really high volume today. That would have been, yep, today. And then Friday, not much volume on them on Friday. And that was options expiration day. A lot of times you'll see big volume on companies on options expiration day. We do have an RSI that is definitely oversold at the moment. They've pretty much been oversold since the 8th of December, with the exception of the holiday break, but that was really light trading. Most of the professional traders are gone for those weeks, so it's mostly the retail traders trading during those 2 weeks. We have a PPO that is bearish. It's in negative territory. Seems to be pretty flat at the moment. And we've been in distribution on this one since probably the 8th of October. It picked up a little bit on the 21st of October and then has been declining since. Money flow has been negative since the 23rd of October. So depending on what happens today, I'm really watching this green line. I may look at picking some up if it gets down to that price.
Thanks, Daryl. So we are getting about to the point where the earnings should drop any second. And I think they were supposed to drop, was it a minute or two after the hour? We're 3 minutes after the hour. We've got 136 people watching our stream. Hello, everybody. Thanks for joining us as we look at Netflix and see how this company is doing. If they're growing, we're expecting top line growth on Netflix to be 17% top line growth. And the earnings per share, we're expecting, or I should say, analysts are expecting 28% growth on earnings per share. Are they going to meet that? And the implied move that Daryl was telling me about is we should see some pretty big volatility with Netflix. Stock either going up 8% or down 8%. So it's going to be.
It looks like it's going down.
Oh man. Okay. What's going on, Netflix? So it looks like the earnings should be out. Come on, Netflix, put it on your website. Let's get to the details behind that. And it looks like they probably dropped here on CNBC or somewhere. Still not on CNBC. It tends like, I think they release it to the big channels, I guess, first. And hopefully they get it to their website soon. So while we're watching this, I did get a chance to watch the new movies on Netflix recently. I finally was able to catch up. Here we go. So that's 25. Well, we don't want that. We would like to see the earnings for the fourth quarter that we are expecting to drop. Who got the earnings that much quicker? Huh. Boy, there's some quick moving traders out there, huh? The stock's already down 3.7.
I don't see anything on Seeking Alpha yet.
All right. Well, they're going to make us wait a little bit. I'll just keep refreshing my screen here. Looks like they're going to have their earnings call in about 40 minutes. So
according to StockTwits on X, the revenue was 12.05 billion versus 11.97 billion expected, and the adjusted EPS of 56 cents versus 55 expected.
that sounds good to me.
Yeah.
That sounds like positive. So why is the stock trading down? Well, the stock's trading down a little bit. Here we go. 5 minutes ago, Netflix beats on revenue estimates and subscriber growth reached 325 million.
Thought they weren't providing those numbers anymore.
It's probably if the news is good, they'll provide it. It serves them well. They're like, hey, let's provide it. We can get a little credit from our investors. And still no financials on their website. You would think they could just schedule it, right? Like, hey, you can just schedule it and then it just drops. Not sure why we're sitting around hitting refresh here. All right. While we wait there, and let me know if you get access to the financials somehow. But the forecast, take a look at the forecast. Now, this is all without Warner Brothers. And we're expecting the revenue growth to be 17.9% for the full year. That's good growth. And the percentage is going to be coming down to 13, 11.3, and then 9 as they get bigger. And once you add that Warner Brothers piece to it, it's going to make the percentage growth smaller because it's just going to be a bigger entity. It's going to be harder for them to grow by these really big numbers. So that'll be something to get used to. And that's all assuming they're the ones that get to acquire Warner Brothers, because I think Paramount's trying to acquire Warner Brothers. So we'll see if that works out. This year, the analysts were expecting $2.62 per share in earnings per share. And then that's a good growth of 32%. That's terrific. And then 26%. So the PE growth, the PEG ratio looks really good. I think that's what analysts really like. So
I do
that's
have
what
their
we're.
press release.
All right. Let me have you share your screen, sir.
Okay, so they delivered 45.2. That was 16% year over year. Operating margin of 29.5%. That was up 3 points. Ad revenue, they added rose more than 2.5 times to 1.5 billion. Revenue increased year over year for the quarter. 325 paid memberships. Operating income grew 30% year over year. Working closely to close our acquisition. Okay, and then we get to the revenue, 12.05. That's 17.6% year over year. Operating income was 2.9. That was 24.5 quarter over quarter or year over year. Can't tell. This is which one. Forecast for Q1. Okay, I don't know whether this is a quarter over quarter or year over year number. Q4, 1, 2, 3. I presume this is quarter over quarter here. Okay, 56 cents diluted EPS. Free cash flow was 1.874. So 1.8 billion. That's a number you need, right?
Yep.
Any of these other numbers? You need the revenue?
No, I have access to the same information, so I've been updating my
Oh,
analysis.
okay. All
Thank
right.
you.
Okay, returning shows. We probably all seen Stranger Things. What'd you guys think of the new Stranger Things, the new season?
I like the first couple, and then I stopped watching it.
Yep. I
So
probably should have done that. I committed more time than I probably should have.
yeah,
That's more my wife's liking than mine, but I enjoyed the first couple of seasons. I thought it was kind of interesting.
I watched The Rip, which with Ben Affleck and Matt Damon. I enjoyed the movie. I thought it was a good movie, and that's a
Okay.
new release.
I think the rest of this thing, you really have to sit down and read it. It's hard to skim through because there's just a lot of detail.
All right, well, let me take the screen back, and I'm
Okay.
just going to go through my valuation. So I already updated my free cash flow. Now let's update that. The cash and debt is probably going to be around the same place. Let's take a look where it is. And are they going to give us some financial statements in here? Here we go. All right. So cash and short-term investments is here. Looks good. 9 billion. 63. And they have a little bit of debt. Now they decided to go all cash for the acquisition, which means they're going to take on some debt. So when they take on some debt, it's going to change this number. Let me get my little editing tool here. So since they're going to go all cash, it's going to change the balance sheet, and this number is going to go up. Not a big deal. I don't know that I like the idea of acquiring another business. I think what makes Netflix good is that they really focus on streaming. And with Warner Brothers, they're picking up some assets that are more legacy, like not the latest and greatest in the way that people want to see movies. So that is one of my opinions on Netflix, that I don't know that I like the acquisition. What do you think about the acquisition?
Well, they have revised their offer. They went to an all cash offer. They were looking to buy the studio, which I thought that would have been beneficial to them.
Mm-hmm.
I don't think they were too terribly interested in, the legacy cable business, but they have made an all cash offer, and I still do not know, because I haven't read into the details, if that includes the legacy business where they're just going to pay cash for the whole thing and then possibly spin that off later, or whether it still includes a spin off at the time of close. So I thought that it would probably benefit them to have the studio itself, because I think they're probably having to lease a studio somewhere. But I know a lot of people that don't agree with me on that. So
Yeah, my opinion on studios is it's not a good long-term business, because there's just a lot of overhead involved.
yep,
You're becoming a real estate company,
yep,
and you have a lot of overhead. So it takes you from being a streamer is great. Now, back in the days when they could just license, content and put it out there, those were the good old days. But now they have to start making it. I mean, the movie business has been around for more than 100 years, and it hasn't made, for the biggest, most valuable companies. No, Disney's doing okay, but they're not near the top. Near the top are, Nvidia, Apple. It's whoever owns the technology, like something that's not easy, but I should say very profitable when they sell it and so forth. Let me get into my valuation. I have updated everything Netflix. This is as of this moment, and their free cash flows improved. Free cash flows improved nicely. I am growing this year by 15%. And then after that, 14%, which is a little tiny bit conservative, but that's okay. Rather be conservative. And I get to an intrinsic value of those cash flows. If I take a net present value of the cash flows I expect in the future, it's 377 billion. I add cash and take away debt, and I get an equity value of 370, let's call it 374 billion. Market cap on the stock is 397. So the stock's about 6% too high. And you see why I sold. When I sold, it's like we started to get to this point where, okay, the stock was priced correctly. So I sold it, I guess 4 months ago, 5 months ago to this point. And no, actually more than that, more like a year. And now the earnings per share is going to be $3.30 expected in 2026. I'm going to give them a P of 28. That's pretty generous. And then a growth rate of 18%. So, and I think this PE could probably be 25. We're seeing some lower PEs. So the stock's fairly priced. And it's interesting how you on your charts are showing that it was $82 was the price that you felt there's support around. We're not too far from 82. So the stock price is near its intrinsic value. Where it goes from here, what could cause it to rally? Well, I think investors are going to wait a little bit to see if this acquisition is going to be approved, if it's going to be them that get Warner Brothers, or is it going to be Paramount that gets Warner Brothers. So there's going to be some shoes that need to drop before investors are like, okay, this is the Netflix I'm buying. And I think there's going to be some hesitation or maybe reluctance to get into the stock. in my opinion. What are your thoughts on Netflix? And let me give you the screen, sir.
Well, they are. Well, let's go back to. So I have this support line here around 82. They are currently trading right at about 83. That is off the bottom in the early hours of the aftermarket. You can see here that they pulled down to about 82 and a half and back up to 83.6 or so, but they look to be leveling off there. And then when I looked at fast graphs earlier, they also had them at fair value, pretty much currently where they're trading. So, yeah, they're going to be down $5 a share from that, and the fair value is 37 times. They have an operating growth rate over this 13-year period of 37.7% per year. That gives them a fair value right around there, and their normal multiple is this blue line, and that is what the market typically applies to Netflix, although they haven't really traded at that market multiple since 2020. But looks like they're trading right around what would be considered fair value at the moment.
Yep, that's my conclusion. Is they're pretty close to fair value.
Yeah, it looks like they're going to grow about 28% next year, 22% the year after, and 13% the year after that.
And to be specific, you're citing that's their earnings per share growth.
Yep.
Versus revenue growth is much lower than that. They're going to grow at like 15% in 26. Very good, sir. Nicely done. What's your expectation with Netflix going forward? What do you think it's going to do?
I think it's probably going to trade sideways until we get some clarity on this acquisition, which could be a while.
Yeah, I agree. And again, they're going to have to compete against Paramount.
Yep.
And it's not a done deal. It's not like, Warner Brothers and Netflix want to merge and they just need to go through the hoops and process. No, they've got a contender out there that wants the company as well. So the stock is
about every other day, because I own WBD, I get a tender offer because Paramount is trying to buy shares through a tender offer right now at $30 per share to anybody that wants to sell at 30. They're trading about 28, I think. Let me double check.
And you're not ready to cash in yet?
I haven't yet.
Okay.
Yeah, they're trading at 28, but I could get 30 for them through that tender offer.
Interesting. It's interesting that Paramount's trying to grab as many shares as possible so they have some voting, some voting power.
Yep, that's what I think's going on. They're basically in hostile takeover mode at the moment.
Oh, wow. Yeah. Interesting. It's kind of a little bit of a drama playing out.
Yeah.
Corporate drama. So we've got 205 people watching our stream. So thanks everybody for joining. Let us know if you have questions on Netflix, any questions you want us to go into. I cover fundamental analysis. So if you have questions around cash flow or earnings per share profitability, maybe even comparison against their competitors, I'd love to get into that. Or if you have anything on the charts, any technical analysis, Daryl is awesome at that. So if you have questions, put them in the chat and we'll try to respond to them. So, all right. So Netflix is in it. You said the implied move was 8%.
Yes, sir.
And you know what? Your spidey senses are, I think they're on today because we're at 4.7. We're still not through their earnings call. And I think the biggest concern is this merger. It's like mergers. I in general, I don't like mergers. Mergers tend to be like they just don't work. It's like you can't grow. Maybe you feel threatened, so you have to merge with somebody else. There's a few that have worked quite well. It's usually like when a big giant company acquires a small business, it tends to work. Like Meta acquired, at that time they were called Facebook, acquired Instagram. Genius. WhatsApp. Genius. But it was a giant company that was acquiring a small company and then growing that small company, giving them all the support that they need. In this case here, we're not dealing with that. It's giant company acquiring giant company, and giant company that's been around for 100 years. That's not an exaggeration. Warner Brothers has been around for a long time. And that tends to come with a lot of legacy baggage. It's like, it's not going to be perfect. Rust moments. Netflix. Yeah. I think that is an understandable statement. You know what I'd like to do at this point? Let me compare them against what I believe, because the whole universe that Netflix operates in, their biggest threats are going to be YouTube and I think Meta, because what they're trying to do is they're trying to get eyeballs. They have a free service similar to Meta. And let's compare them over to those two. What other company do you think Netflix should be compared to?
I think you probably have that covered with the ones you mentioned.
All right. So Goog, Meta, and then Netflix, because these guys are that size, right? Okay. So we've got Netflix has a forward PE ratio of 28.6. They're growing in 2026 by the top line by 13%. Their earnings per share is growing by 26%. These are good growth rates because they are big. So let's compare them to our friends over at Meta. Meta has been sold off. They announced about 3 months ago, and they said, hey, we're spending a lot of money in that data center. And the market said, we do not like that. We do not like that at all, and have sold off the stock quite dramatically from 751 down to 604. What that's created is, look at this PE ratio, 20.7. That's far below Netflix. Okay. And this is a bigger operation. In fact, it's quite a bit bigger. Netflix is about $50 billion in annual revenue. Meta, 240, more than 4 times bigger than Netflix. And it's growing its top line at a faster percentage rate. Impressive. And it has a PE ratio of 19.6, well below that 28 that Netflix is getting from the market. So I think Meta is discounted. And when I look at the margins, one thing I forgot to look at, let's take a look at margins. The margins on Meta are just fantastic. 82% gross margins, net profit margin of 31%, and then their free cash flow margin of 24%. So those are fantastic numbers. And our friends over at Netflix, let's see what they have. When we look at their profitability, 48% gross margin. So nowhere near where Meta's at. Meta has this fantastic business. They don't have to create content. They have people creating reels and Instagram posts and Meta, community posts on Facebook and all that stuff. Well, it's just people creating content. So the people's activity is the product that people want to see. So it's very profitable, as opposed to Netflix has to create content. They have to do the Stranger Things set. They have to do all the animations and all the stuff that they do to create the real scary scenes. And the gross margin is far lower, and the profit margin is lower. Free cash flow, lower. So lower revenue growth, but a higher PE ratio, priced higher, but the fundamentals in my opinion, favor Meta. And when we look at Google, Google has a humongous business, 385 billion. Again, Meta's 240 and Netflix was 52 billion. So compared to Netflix, Alphabet is, 7 times bigger. And their forward PE is a little higher than Netflix. They've been on a nice upward trend. I think that has something to do with it. And we look at the forecast for Alphabet, they are expected, even though they're a massive business, they're going to grow at 13.56%. That's really impressive. If you think about that percentage on this number, they're growing by the size of a Netflix, more than the size of a Netflix every year. So they're adding like the proportion of a total Netflix on their top line. That is impressive. Earnings per share is not growing quickly. I think part of it is they're putting so much darn money in that data center so they can do more cloud infrastructure services. And they're also are building out their AI services, Gemini being their flagship. So I think that's really trimming back their profits. Forward PE for Google is 28, probably about the same as our friends over at Netflix. But I would say that the power of Alphabet, because they have the number one search business, the number one streaming business, number two is Netflix. They have awesome cloud infrastructure business. They have Waymo, they have AI, they have really strong assets. That this one here is just a powerhouse. Glad to be an owner of Google. But I owned Google. I've owned Google for a while. I've owned Meta. I owned Netflix for a while, but decided to sell Netflix about a year and a quarter ago. And I'm glad I did so. So when I compare the three, it's just, that's where, I voted Netflix off the island because its fundamentals are just not as strong as the alternatives I have in Meta and in Google. So that's part of why I sold it. And it looks like the stock's under pressure after their earnings. Any other comments on Netflix, Daryl?
I do see the after hours is starting to pull back again, getting closer to the lows that we saw just about 10 minutes after the hour. So they did come back up and now they're falling back down again at the moment. So the call, I think, is going to be really important today.
Yeah, and it starts in about 14 minutes. So we'll see if the management team can rescue the stock. But I don't think so. I think the stock's, like you mentioned, I agree with you that it's going to go sideways. I think that's what it's going to do.
Yeah.
Because let's see, this is a better chart. I think it's going to go sideways in the mid 80s, maybe even as low as like 75. It's just going to bump along sideways. And even after the merger, let's say everything goes as they would like, which is they acquire Warner Brothers. Okay, great. It's a part of Netflix. I still would give it a couple quarters to see the combined financial statements. How does it affect your overall gross margins? How does it affect your profit margins? How does it affect your growth rates? That's important because, Netflix is not super unique. It's not like they have a competitive advantage where nobody else can stream movies. No, a lot of companies are streaming movies. Apple, Amazon, Paramount. You've got Comcast streaming. You got Disney streaming. You got competition. Netflix is outperforming all of those except for YouTube. But they're not unique. They don't have, I think, a strong moat to fend off competitors. All right. So that's what we got on Netflix. That is interesting. It looks like Russ Moments has got a lot to say. Thanks for weighing in. Yeah, I agree. YouTube, what I like about YouTube is you can do a lot of searches. Sometimes I don't want to see like an hour and a half movie. Just want to see like a 10, 15 minute kind of like mental break. And YouTube's good for that. And yeah, I think, in general, I don't know that they missed. I think they came in as expected. Um, we're going to, investors are sitting this one out. They're probably like, hey, you know what? I'm just going to sell my Netflix stock, wait for the dust to settle on the merger, come back to the stock once it's a combined company, and then I'll analyze the company at that point. That's what I think is happening. All right. So I think I've shared everything I've got on Netflix. Anything else, Daryl?
I don't have anything else, but Rust Moments is posting a lot of information there. I have a lot of respect for him. He's a young guy,
Mm-hmm.
but he puts a lot of effort into his research and making sure his facts are correct. So I got a lot of respect for him as a young man.
Good to know. Rush
Yep,
Moments. Way to
he's a
bring
good
it.
he's a good guy.
It's great to see like young investors really apply themselves. And I say this with all seriousness. The younger you are and the more serious you are and the faster you learn, the wealthier you will be because you have the
Exactly.
advantage of time.
Time is your friend.
If you wake up and you're 60 and realize, hey, I got to start growing wealth, okay, that's a good idea. But if you wake up and you're 26 or younger and you're like, hey, I want to grow wealth, this is fun. I don't want to play fantasy football. I want to play fantasy stocks and, grow my wealth. Start maybe the $100 and grow it to $10,000, or start with $1,000 and grow it to $100,000. So if you start when you're young, it's really exciting to see that. And no matter what age you are, it's great to be an investor that really applies themselves, and you develop a skill set and you empower yourself. You're able to then invest in the market. Today we had a down day. It really didn't affect me emotionally. I put in my buy orders. I'm good to go. If it keeps selling off, I'm not celebrating the sell off, but I'm taking advantage of it. And because I already know the businesses that I want to add shares to. And that comes with years and years of doing it and having, I think, a lane where I know I can make money. And Daryl's got a very different way of investing, different than mine. I think there is a little bit of crossover. I appreciate what he does. And it gives me a different lens at stocks. So you don't have to copy everybody. You can create your own investing strategy based on the skill set and strengths that you have. Looks like Neil is on. He's been on before. Good to see you, Neil. And good stuff. Any other comments on Netflix? Any other questions?
Not for me.
All right. So while we have the audience, just a quick glance. Another company that announced before the market opened was 3M. And boy, did they sell off, huh? They sold
Wow.
off 7.5%. And I don't quite get it. And maybe we're seeing the same thing with Netflix. I think Netflix announced their earnings and they were a little better than what was expected. That's what I'm seeing. But the stock's selling off. Maybe it's because the market opened on Tuesday with the sentiment being fearful due to the tariff escalation. And, investors came in thinking sell, 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 and they were selling off. And that's how they sold off 3M. And in a way, I'm seeing it here with Netflix. The financials look good. They came in, they announced earnings that were a little better than expected. And I looked at 3M in detail. I did it on the member call, and everything would look good. They grew a little faster than what was expected. They were a little more profitable than what was expected, and their stock sold off. So I was like, Now, is it because the market was selling off? But they sold off pretty harshly, right? 7% is not little. And so these guys here, $82 billion market cap, forward PE of 18. That's a pretty low PE. They pay a dividend, not the biggest dividend we've seen. And this stock here is all about buying it at the right time, which is what I did. This was a very, very good brand that had fallen on hard times, fixed their business, and has started to really appreciate nicely, moving from $87 a share up to 156. Now, where's it going to go from here? I think the fundamentals were good. Fundamentals were really good. And their growth is expected to return 3% growth in 26, 3% in 27, almost 5% in 28. And their profit's going to expand nicely. So this one here was a little bit of a curveball that I couldn't quite get my head around. I think the market's overreacting, and the market's going to take 3M down to its PE is going to go down, but its priced its earnings per share growth looks good to me. This is not going to be a super fast grower. It's already big. It's in a mature industry. But I was a little surprised that it sold off so much. I actually bought some shares today, so took advantage of it. Any comments on 3M that you'd like to provide, Daryl?
They have done a little better over the last year or two than they had been before. It's not one that I follow. Let me get back to them. So I'll move out a little bit more because they were really struggling there for a while. They had peaked out back in 2021. And they sold off all the way through 2022 and 2023. The first part of 2024 when things started picking up. So they've had a nice recovery from the issues that they were having, but it's not one that I really follow, very closely. Except today, I see that they're coming down and could test that 200-day. Again, they've done that once this year. Looks like they could come down and test it once more. Looks like the RSI dropped below 40. That's usually not a very good sign. They haven't done that since the tariff sell-off. I can see they got down below 40, got into oversold condition, but they went from above 60, looks like 2 days ago, and they're below 40 now. Now, the PPO is signaling a sell signal at the moment. Let's look at this one on the weekly view and see what it looks like. They're still above 40 on the weekly view, but they've had a sell signal since the 15th of December.
What gave you the sell signal on the 15th of December?
It's when the difference between the 12 and the 26-day moving average crosses below the 9-day moving average. That's a signal line. Excuse me. Signal line is the red one. When the black crosses over that, especially on the weekly view, that's typically a pretty good sell signal.
Got it. Okay.
Back here, they were in really bullish territory because they were above, quite a ways above zero. But this sell signal, you wouldn't have really lost any money, but there's some opportunity cost here having it for a couple months when it's not doing anything other than paying dividends. And here we got a buy signal and then another sell signal. So that would have missed this. So anyway, I don't abide by these 100%, but I do keep an eye on them for sure.
Well, I think that comment is consistent with how the market's treated the stock. So that's why I was curious to understand your explanation there. Thank you. All right, cool. So quick super chat from Bo. Thank you so much. I cannot talk about Oracle publicly. And if you email me, I provided my email. I could explain further. And if you could, Bo, if you can give me a different stock, glad to take care of that. Or if you come to another live stream, you can ask for a stock. I'll be sure to cover it, but I cannot review Oracle publicly. Hopefully you understand. If you email me, I'll explain further. All right. So
I can show fast graphs on Oracle since you can't talk about it. I can,
okay. All right. Go for it.
and I'm not going to make any big proclamations other than to say they are overpriced, in my opinion, and in the opinion of fast graphs as well. Their fair value would be down here at the orange line. For many, many years, let's just go out to the max time frame. They have traded right at their fair value or below, and then all of a sudden they've broken out and gotten way above their fair value and their normal market multiple. So from a risk perspective, they're a little risky at this point. You'd really have to watch what you're doing with if you're buying Oracle at these prices.
Thank you, Daryl. You kind of rescued me on that one. Bo, you're awesome. You always come back to these streams. You're a big super chat contributor. Please let me know what stock I could cover either on this stream or another. And thanks so much for your support. Ben 10. Let's look at WTFC. Let's take a look. WTFC. Wintrust Financial Corporation. These guys are a financial holding company, provides community-oriented personal and commercial banking services in the United States. It operates through three segments: community banking, specialty finance, and wealth management. So this is like a regional bank. All right, let's take a peek at their website. And regional banks are supposed to do well, but I have a 21-year-old son that just finished his college degree in economics, mathematics, and he started interpreting what's going on with Japan and how bond prices today, bond yields went up, bond prices went down, and stocks went down. Obviously, you guys know that part. Stocks and bonds are not supposed to go down on the same day, especially drastically. Usually is a point where economists kind of take notice. Hey, what's going on? So he's concerned. And if a 21-year-old little or young economist, he's taller than I am, so I can't say little. It really caught my attention, and he explained it to me, which was interesting. Now, if interest rates are going up, which is what happened today, that is not going to set up regional banks as well. Now, it's just one day, but just keep an eye. If you're going to invest in regional banks, you need to study interest rates. Be sure you understand the trend. Be sure you understand where it's going, what's expected. I still expect interest rates are going to be lower in the future. And, if things calm down around the tariff side, if things calm down, I think we'll go back to lower interest rates are expected. But if things escalate and things get ugly and interest rates go up, we're going to be in a zone of not sure what's going to happen. And in that zone, I think investors take their capital off the table. Like, hey, I'm taking my capital off, risk off. All right, enough said there. Let's take a look at what these guys have been doing. It's a $9.7 billion market cap bank. Revenue is 2.56. Forward P looks okay, 12.34. A dividend of 1.38%. Over the 1 year, this is only up 7%. Over the 5 year, it's done quite well. It's doubled in value, more than doubled in value. Now, the 1 year is not keeping up with other banks, especially the large banks. You have, and I'm going to show you some bank performance metrics, and this one's not going to be anywhere near the top. But let's take a look at some other things like book to value, their growth rate on top line, and so forth. Now, their growth is impressing me. 13.5 looks good. Now, they're a smaller bank, so it's easier for them to grow, but it is still good. Double-digit percentage-wise growth is really good. I like that. And that's what regional banks can do. They can outmaneuver and out hustle the bigger banks, get involved in financing that will enable them to grow. So the revenue growth looks good. Now let's take a look at the price to book. The price to book average for bigger banks is about 1.7, and these guys are at price to book. So the book value is like the assets, all the assets, you deduct all the liabilities, and that's your book value. Well, for them, it's not quite 1-to-1. 1-to-1 would mean the stock price is priced right at the asset value. So there's no additional value from the business being priced into the stock. In this case here, it's at 1.46, which is closer to the average. So overall, I'm liking the revenue growth. I think it's a pretty good stock, but it's not super impressive. And I'll show you in a little bit. 1.46, remember that number. Last thing, so earnings per share and forecast. Let's take a look at that. 13 analysts are covering this. They think it's a little discounted, almost 8% discount. We've got in 2026, they're going to grow by 6%, 6% earnings per share growth, bringing down their forward P at 12. We have other banks at 14, 15 PEs. Let's take a look at those real quick. So when I compare this bank, right, this regional player against the big boys, the bigger banks, even a couple of regionals that I have in here, this is my bank comparison. And I did a video not too long ago, and Citi announced their earnings last week, so I updated this guy. And I actually did a video last week on banks. So this is fresh on my mind. So look at this price to book. Now the price to book on the WTFC was 1.4. So it's not as good as Citi. It's right there with US Bank. It's right there with Bank of America, but you're buying a more established bank in Bank of America. So I'd rather buy Bank of America versus a small regional player. Small regional player is riskier. So I'm not getting any kind of discount from buying a regional player in that case. So their price to book is not awesome. It's okay. It's near the top, but it's a regional player. It comes with added risk. Now, 12 PE is good. It's comparable to Citi, but I'd rather buy Citi because it's bigger, more established, lower risk. And it's not as good as US Bank. US Bank is outperforming it on US Bank offers a better discount based on the PE ratio. So it'd probably rank in the middle of the pack, and I'd still be leaning towards Citigroup or a different regional bank. And trust me, there's 100 regional banks to pick from. I would look at regional banks and create one of these guys, one of these schedules for yourself. Maybe look at 10 banks and look at their price to book, look at their PE ratio, and look at their 1-year performance. That way you know if the market really is buying them up. And the stock we're looking at, the WTFC, it's only up like 7%. So the market doesn't like it, but the market likes Citigroup. The market really likes UBS. The market really likes Bank of New York. And those banks are really being bought up. So for me, WTFC would be a pass. Let's see what Daryl has to say about that regional bank.
Well, I'm looking at the trend channel. So I'm looking over 10 years, and I've connected this one to the bottom here. We had another test there. We had another test here. So I'm going to use that as the bottom of the trend channel. Made a copy of it, just moved it up to the top and tried to connect as many points on the top that I could connect. Looks like over a 2-year period, the slope of this line is about 23% per year. I made another copy of a dotted this line, just drug it down to the middle so I'd know where the midpoint is and turned it into a dotted line. So they're trading right at the midpoint of this trading channel, which It runs off the top of the chart here, so I don't know where that actually is sitting. But it's been trading right around the midpoint of that channel. And I haven't looked at the actual change over a few years, but this 23, if I just cut this in half, because this is for 2 years, I'm measuring the slope of that line over 2 years, so I have to divide this in two. So that'd be 23%. So if this trend continues, you could expect in a year or two that they'd compound about 23% as far as price, if I'm interpreting that correctly. So anyway, yeah, these ranges look really wide when you look at it on just the 1 year, but they're pretty much trading right in the middle of the range. And I agree with Victor that I think something like Citi is a much better option at this point. They do have an RSI that is above the 50 line, so it is in bullish territory. PPO is in bullish territory. On a daily view, we had a sell signal a few days ago. So this one kind of looks like ho-hum to me at the moment.
Yeah, it just doesn't have like if you're gonna go regional, I mean, you got to show me something of a special discount, like something really compelling. And it's not compelling. It's like, well, you know, I can have lower risk options that are with bigger banks that have better ratios. I don't want to take the big risk in this regional player, but I think if you studied 10 probably banks that look good to you and then compared the ratios, I like doing that. And then the ratios are the ratios, the data is data, and then compare them that way and then scorecard them. All right. So anything else on that particular stock?
No, not for me.
All right. So let me kick it back to my screen and I'm going to go over interest rates. So this was now interest rates. This is the 5-year, 10-year treasury. It's probably the most cited interest rate yield that is used. Like when you get a home loan and so forth, they use this. Now, back coming out of COVID, this is back in 2021, and COVID, of course, was 2020, and the Federal Reserve drove interest rates down, made them really low. And then they were like, oh no, inflation. So they cranked up interest rates. And over a short period of time, they went up probably about 250 basis points as was really fast. And you remember Silicon Valley Bank and the bankruptcy or the run on the bank, Daryl?
Yep.
That's what was happening there. And when interest rates fly up like this, the value of bonds goes down. And the way Silicon Valley Bank got torched was they were holding a lot of bonds on their balance sheet, which they should be. They're a bank. And those bonds lost value because of the interest rates going up so fast. And the depositors got nervous and they took a run on the bank. And oops, they hit a circuit breaker. Another bank acquired their assets. They don't exist anymore. So I don't think that's going to happen again, but that's why you have to watch interest rates and be aware. If you're going to go into regional banks or large banks, interest rates have a big impact on them, obviously. And I think that interest rates are kind of hanging on to this, 4% level. They're kind of clinging to it. If you would have asked me a month ago, where are they going? I would have said they're going toward 3. Now, I'm not a rocket scientist for saying that. It's just we got a president that wants lower interest rates. We got an economy that's doing okay. A lot of things tell me that, hey, we could probably go to 3. But now it's like, okay, well, I don't know. At least it's not going to get to 3 anytime soon. Maybe if things kind of settle down, we don't have more noise around tariffs and uncertainty. Maybe we can let things settle down and then we start, to go toward 3%. and a full 100 basis point decrement to interest rates, which would help regional banks, big banks. It would help financing. It would just really create a lot more activity, which is what the Federal Reserve is looking for when they lower rates. So that's what I have to say about that. It was a good day to buy bonds. I did buy some bonds today, by the way, or at least a bond ETF. All right, what's happening with Netflix? We're down 4.7%. The management team has probably gotten through their opening remarks and is heading toward the Q&A of the call. They're not saying anything that's making investors more concerned or less concerned. I guess it's bounced back a little bit from about down 5% to, well, as I speak, it's going down further. So I better just wait. I'll give it 30 minutes and then we'll see where we lie. All right. All right. So that was Netflix. What else? What other companies announced today? So we had Netflix, US Bank. We had some comments on US Bank, 3M. What's your sense of real estate and home builders? Do you have any thoughts on that?
Real estate was looking really good last week. Realty Income, the REIT, is not far from adjusted highs. NNN REIT is also not far from highs, adjusted highs, and WPC has really been doing pretty good this year, but they're a data center play. I think they have their hand in data centers a bit. So they've been doing really well. Staples and real estate have been doing really well this past week. I put out a whole video on that this weekend.
Okay.
So
good to know. It looks like United Airlines announced. I did want to look at their earnings because I owned United Airlines, and let me cry on your shoulder for a little bit. So I thought, okay, these guys are growing their revenues really well. So I invested around this zone and they went up and I cashed in. I cashed in a little too early. So successful investment, but I just cashed in too early and then the stock's gone higher. All right. Well, again, I made money. So that's good. I just could have made more money. But I'm out of United Airlines for now. It looks like the stock is trading higher. And, the airplanes are full. People are traveling. That's one of the metrics that I'm looking at that tell me that the economy is in good shape is that the consumer continues to travel. Travel tends to be completely discretionary spend. You don't have to take a trip to Disney World. You don't have to take a trip to, you name the location, but people do it when they're like, you know what? I want to get away. Got a little extra money. I'm gonna go ahead and spend it. And United Airlines is moving higher. Man, I should have stayed in that stock, but it didn't happen. Look at that. Over the 1 year, it's only up 1%. So back here, I could have gotten back in. Didn't, but oh well. Okay, so United Airlines, here's the things that I liked. See, coming out of COVID, look at this growth. I couldn't believe the market wasn't acknowledging how well they were growing. And now they're growing a little slower, but it's still decent. And their profitability, I think, expanded. Yeah, expanded nicely up to 34% gross margins. Now, airlines is not a long-term investment. I always, when I invest in airlines, I get a little nervous because I think it's one of Warren Buffett's, like, what do you call it? A list of commandments. Do not buy airlines. I'm like, oh man, don't stay in United Airlines too long. So the growth on United Airlines looks good going forward, but I think the stock's already priced up. We have a very low forward PE. And good for investors. I'm glad they made money. United Airlines is a well-run airline. They're making good money. I fly United quite a bit. So that is what's happening. Now, one of the things that one of the reasons why I'm looking at United is that I'm an Airbnb investor. And if there's going to be travel volume, that means Airbnb is probably going to do well because as people travel, they stay in Airbnbs and would probably, their revenues are probably going to grow nicely if United Airlines is growing as well. Any comments on United Airlines that you'd like to share, Daryl?
They seem to be a little under their fair value at the moment. I was looking at Delta as well, and I think they're underpriced according to their fair value. We could go and look at the chart. Okay, we'll pull up a chart here on UAL. So they're basically trading where they were in January. It looks like they pretty much round trip. Today they're pretty much trading exactly at that value. So they were down 4.33% today. They are trading above their 50-day, which is upward sloping, the 200-day, which is upward sloping. I see a shorter term trend line between the tariff lows and this point that'd be really critical to keep an eye on because it's going to line up with that 50-day pretty closely. They did have above average volume today, and the RSI is moved into bearish territory. And we had a bearish crossover here a week or so ago on them. The money flow is starting to turn negative. So I would definitely look for a test on this 50 or maybe even down to about 97 or so on UAL.
Looks good. Thank you, sir. All right. Let me finish this comment. All right. Good. So that was another one that announced. Let me get back to my screen. We got 213 people on the stream. Thanks, everybody, for joining us. Really appreciate you and appreciate you joining our watch party. Netflix. Let's take a peek at Netflix. What's going on Netflix? It's 4.38. It's a little better than previously. Management's probably done through their prepared remarks and is in the Q&A. Probably getting asked questions around Paramount and so forth. We'll see where this thing settles down and more importantly, where it trades tomorrow. Sometimes these stocks, it's they trade down and then the next day they rally, or the opposite. They look good in after hours and the next day they sell off. So I think investors will weigh what they're hearing, what they're thinking, and then truly the direction of the stock is going to be determined beginning tomorrow. Like after 2 hours of trading, we'll see where Netflix is headed. And again, it begins at that point because for all we know, it's starting a sideways trend or who knows. But, investing is an art and a science, and we need to be able to kind of let the market give us more information based on how investors and traders are getting in and out of the stock. Looks like the stock's coming back a little bit. That's good. Looks good. All right. So that's the bigger companies. And it looks like Interactive Brokers. That's an interesting one. They were doing really well for a while. Are you in Interactive Brokers?
No, I am not.
Yeah, it's a really good stock. I mean, a lot of these brokerage stocks, so Interactive Brokers, Charles Schwab, Robinhood, they've really have cleaned up. And this one has cleaned up. And it's a smaller cap, 31.85. Revenue, 6 billion. It is trading lower a little bit. I wonder why. So I wonder what happened with its earnings. Let's see here. No, it's not updated there. So I'm curious to know, did they miss on top line? And the reason I want to know is I've got a pretty big position in Robinhood, and Interactive Brokers is having trouble. It may mean that it's trouble in the industry, and I'd like to know that. So let's see if I can download the results here. And for the next like 6 weeks, we're gonna have plenty to do, right, Daryl? We're gonna have earnings
Yeah,
coming out of our ears.
absolutely. Absolutely.
All right, so they announced today. All right, so per share. Okay, commission revenue. This is like they're people buying stocks and so forth. 22% growth. Very good on higher volumes. Net interest income 20%. Okay, growth. So these financials are looking good to me. These are really good growth rates. Wonder why the market's selling it off. Maybe just there's fear in the streets, right? Like, oh no, stocks are selling off. So Interactive Brokers is selling off. I know Robinhood sold off pretty harshly today. So the revenues are growing really well. But if we get into a pretty good correction or even a bear market, Interactive Brokers, Robinhood, Charles Schwab, and everybody else that is in a brokerage business is going to suffer. That's just a fact. So it's probably more of the market condition. I think they had a very good earnings. It looks good. The revenue is growing really well. So Interactive Brokers is looking good to me. So they're down about 1%, not too bad. Again, they've been a really good stock for investors. The forecast, analysts think it's close to fair price. It's only 3% too expensive. It's expected that the revenue is going to keep growing, and they actually exceeded this number in 25. That's why I thought the earnings release looked really good. Is they're well above that number on the top line growth. Their profits are going to expand nicely, and their PE ratio is coming to the mid 20s. So this one's probably, I can't argue with the analysts. It's closer to fair price. It's been doing well. So I could understand some investors wanting to get out while the getting out is good. Totally get that. Because over the last 5 years, good wealth creator, Interactive Brokers, getting it done. And their fundamentals look good, but the stock is selling off a little bit. What are you seeing for Interactive Brokers?
They are trading above an upward sloping 21-day. 50-day is somewhat flat. 200-day is still increasing. I see a support line here at around 59. I see somewhat of a cup with handle here, which would give it a price target of about $84. Those cup with handles fulfill about 65% of the time, so they're not always successful. The overall market isn't going to help as well. If we were continuing to be in a really bullish phase, then I would be a lot more confident in an $84 price target. But we'll have to see what happens over the next few days with the markets overall. They're also testing a double top here, which they did break above, and then Friday and today they sold off. So that was somewhat of a good sign that they did break out above that double top. The RSI hasn't really been in over bought territory since the 31st of July. They've done a pretty good job of holding the 40 line on the RSI since the 25th of November. They did drop below a little bit, but they didn't get into oversold territory. And they are on a buy signal on the daily chart. So they were in bearish territory and got the bullish crossover, and now they're in bullish territory. So the market's not doing them any favors right now. If it wasn't for that, if we were kind of in the same environment we've gotten used to last year, they'd probably be well on their way to 84.
Yeah, yeah.
We'll have
Well,
to see what happens.
maybe conditions are temporarily different, or maybe they're going to be different for a little while. Most definitely, I understand that. I mean, today was a pretty good sell off. We don't get 2% S&P sell offs for the day all that often.
Nope.
And I think it kind of wakes a lot of people up like, whoa, hey, okay. There's a lot of sellers today. And tomorrow will be key. Like if we trade lower tomorrow, that'll keep the fear active. So we'll see where we go from here. All right. So this I thought was a good stream. Let's take a look at Netflix before we close this thing out. Tell us about your channel, Daryl. What's happening with your channel? What do you got going on your week here?
Yeah, let me pull that up real quick.
With all these earnings, I bet you're doing like all kinds of videos and stuff.
Mm-hmm. And I've been going for about 16 hours right now, so I'm just about worn out here. Okay, let me share my.
All right, the floor is yours, sir.
Okay. So my channel is Investing Portfolio Pathway, and last week I did a video on the Citi earnings preview. I have really high hopes for Citi. I explain why my hopes are so high for Citi in this particular video here, this stock review. J&J reports in the morning, and this is my earnings preview for J&J. And then each week after the close on Friday, I do a video selecting specific holdings out of my portfolio and review the charts, any trades that I make, any trade decisions that I make using the charts. These have been actually pretty popular. I've been doing those for the last 2 months every weekend. This one was a really long one. This was an hour and a half, but I spent about the first 25 minutes just talking about the overall market and what I'm seeing in the market and why I'm being a little bit cautious at the moment. So if you have any interest in what I might be seeing there, you can take a look at that one. And then here's a stock that I'm gotten pretty excited about. And close your ears, Victor, for a second, because he doesn't like IPOs and I don't like IPOs. This is an IPO, but I like this one. So I
just
explained.
Remember me when you're on your yacht and you're a billionaire. You think about me. Remember, Victor wouldn't buy a figure.
Yeah, I bought this like 8 days ago, and I'm up 30%.
Good for you
already. So this I'm really excited about this company. What they're doing is just absolutely incredible at the moment. So take a look at that video if you have any interest. It's definitely not investment advice. I'm just sharing, how I approach these things. And I'm with Victor. Most of the time I stay away from IPOs. This one I think happens to be a little different story. So if you're interested in that, you can take a look at that as well. Awesome. So that's it for me.
Thank you, sir. And I know that some people were asking for stock review, and just wanted to make you aware, I've got memberships for my channel. And if you become a member, you get to request stocks to be reviewed, no matter what level you go with on streams. So consider that. If you'd like to request stocks on streams, you can just become a member and you're good to go. And the membership, as simple as $100 $10 a month gets you those stock requests on live streams, as well as some other member-only videos that I produce for every member, including value members. You can kick it up to advanced, and that comes with perks like request stocks on live streams. But you also get access to all the research that I'm accumulating. For example, here's the terminal that you get access to as an advanced member. Here's a listing of all the stocks that I've got reviews on, analysis on. You have access to this 24/7 on over 360 stocks. So today we updated Netflix as an example. And not only do you get, this list, but the valuations more importantly. So I updated Netflix in real time, close to real time, I should say, not super real time. This thing updates. So here's the date. It's been updated today and it's fairly priced. We updated, what's another one we talked about? 3M got updated today. Boom. So advanced members get access to all my research, over 360 companies research. So 24/7, you don't have to wait for a stream or a video to come out. You can just access it. If you really want to go up one level, you become a super investor. You get access to my portfolio, all the positions that I'm in. Here's a graph of them, the sectors that I'm in. You get access to my portfolio real time, what I'm buying, what I'm selling, my active buys and sells, the watch list that I just showed you, along with the more data behind, what's their discount level, and of course the valuations that are updated real time. So take a peek. If it's something that you think is going to help you become a better investor to learn, it'd be great to have you as a member. We have a lot of members. It's been awesome to interact with members and just everybody learn, everybody get better. Let's beat the market in 2026 together. So become a member if it's something good for you. So that's it, folks. Good stream today to talk about Netflix. We got more earnings coming up. What's happening? I think tomorrow is the big day for J&J. They've been killing it, by the way. This stock's been great. And then Charles Schwab, that's a big one. Prologis, I think that's a real estate investment trust that does warehousing space. And those are the big players. And then we've moved to Thursday, Procter & Gamble, good consumer staple, GE Aerospace. Those guys have been red hot.
By the way, consumer staples was the only sector that was up today.
Really?
Yeah, when you have this big of a sell-off, I expect all sectors to be down.
Mm-hmm.
Consumer staples were actually up 0.3% today.
Yeah, that's where it's safe. Intel is going to announce Abbott, healthcare company, Intuitive Surgical, healthcare company, Capital One, credit card company, Freeport McMoran, gold prices were up. These guys have been killing it. CSX, the railroad company, is going to announce. So those are going to be the big names this week. And then Friday should be pretty quiet. Schlumberger, or SLB as they call themselves now, is going to announce. These guys do oil and gas services. So we'll see what they have to say. Then next week, we got a pretty heavy week. I think Tuesday will be Monday. Sorry, jump around so much. Monday, Nucor, no big names there. But looking at Tuesday, United Health. United Health went up today. I don't know if you noticed that. United Health was up. And RTX, Boeing, NextEra Energy, Texas Instruments, Semiconductor, Union Pacific, that looks interesting. Microsoft, this is going to be a big day. We should do a watch party for Microsoft Meta if you're up for it. This would be Wednesday.
Yep.
And Tesla. And ASML, but that's before the market opens. But these three amigos, man, that's going to be huge. So that would be three companies, a total of over $6 trillion in market cap. Yeah, that's worth doing right there. That'll be fun. All right, guys. So that is it for this stream. Thanks again for tuning in. Everybody, good luck with your investments. Let's hang tight. This sell-off is an opportunity. Let's do our homework and buy stocks and make money over the long haul. Everybody, have a great night. Thanks for tuning in.
Take care, everyone.